Okay, hello everyone. Clarke Towson here. I'm the CEO of INTJ Billing. In this video today, I'd like to talk a little bit about central bank digital currencies. A central bank digital currency is digital form of a country's fiat currency. CBDC is issued and regulated by a nation's monetary authority or central bank. They supposedly promote financial inclusion and simplify the implementation of monetary and fiscal policy. As a centralized form of currency, there's not going to be any anonymous transactions like what some cryptocurrencies are able to provide. And many countries are exploring how CBDCs will affect their economies, existing financial networks, and stability. Now, graphic on screen now, comparing CBDCs to Bitcoin with a Venn diagram. We'll remember our Venn diagrams from university mathematics, and perhaps high school mathematics for some of you. CBDC and Bitcoin. So you can see over on the CBDC side, exclusive to CBDCs, properties, unlimited supply, susceptible to inflation. Of course, CBDCs are susceptible to inflation. Would be the same story as what we experience with traditional fiat currencies, right? Issued by the central bank. Centralized, ruled by rulers with a single point of failure. Opaque monetary policy, variable rules determined by people. Closed and permissioned, access and availability determined by policymakers. Risk of seizure, policymakers can manipulate funds under quote-unquote emergency acts. Privacy invasive, financial surveillance down to the individual transaction level, with the potential to be exploited for behavior modification based on habits deemed undesirable, aka social credit score. Think China. Enables censorship. Parties in control can exert influence and control to restrict access, limit usage, and edit, reverse, and block transactions. CBDCs, all right? So on the one hand, there are the properties of CBDCs. On the other hand, we have Bitcoin, properties of Bitcoin, limited supply of 21 million, cannot be debased, decentralized, rules without rulers, no single point of failure, clear monetary policy, fixed rules determined by math, open and permissionless, anyone, anywhere can freely use it, unconfiscatable, no risk of seizure if keys are stored correctly, privacy conscious. Pseudo-anonymous transactions appear on a public ledger, but addresses are not linked to identity. Censorship resistant. No one person or group of powerful people or governments can prevent anyone from transacting or edit and reverse transactions. CBDCs versus Bitcoin. What sounds better to you, the viewers of this video? Like the sound of CBDCs, or do you like the sound of Bitcoin? Now, in the middle of the Venn diagram, the properties that both CBDCs and Bitcoin, both of them have, they're both money, both digital, durable, acceptable, portable, divisible, and uniform. All right? In the years ahead, we're going to hear more and more about CBDCs, how great they are for all of us as the everyday person on the street, right? You're going to see politicians and people in positions of power and influence within government spouting off the benefits of CBDCs and, of course, ridiculing cryptocurrencies in general and Bitcoin specifically, okay? I thought this graphic was very well put together and very interesting because in the years ahead, don't be under any illusions as central banks push out their centralized digital currencies, you're going to hear all about the benefits of them, right? You hear all this positive stuff about them. But what about the negative stuff about them? What if we look at them and compare them to Bitcoin? Bitcoin is the people's money. Never forget this, okay? Bitcoin is the people's money. It's not a digital spy coin, even though its ledger is open and people can see the transactions that are occurring. Anyone can audit the blockchain, right? It's not tied to identities. CBDCs, however, right? It's the ultimate government authoritarian dream, right? To have a digital currency that that is privacy invasive, that who is engaging in the transactions. And of course, governments, they love to put all these controls around money, right? Centralized providers, even my company, INTJ Billing, back in Australia, the financial regulator, Austrac, didn't want to admit my company to their registries, right? And basically, if you bottom line, the reason why is, Clarke, we don't think you make a good enough unpaid spy for us, right? That was their reasoning at the end of the. If I could boil it all down. Now, of course, they didn't use those particular or that particular sentence, but that's what they meant with the rejection documents that they sent me back, right? But it's interesting to think about the world ahead, right? The path ahead, what is going to happen. And all around the world, it's going to be the same story from central banks in each and every country. They're going to want to introduce these central bank digital currencies. They're going to extort the benefits of them and say how great they are. And you'll hear a whole lot about how cryptocurrencies are no good and they cannot be used for this purpose, and how Bitcoin is unsuitable for this purpose, so on and so forth, right? Don't forget, when they do get introduced, okay, they're not going to make a good store of value. Just like normal fiat currency is not a good store of value because it can be inflated at will by people who are in charge, right? People who are in charge of the printing press or the money printing press can print up more of the currency. And of course, that costs all the rest of us. And that is not possible with Bitcoin, right? So Bitcoin will always be a much better store of value than any central bank issued digital currency. And of course, CBDCs won't be on a blockchain. Why would they need a blockchain? When it's centralized, just a everyday database will do for that purpose, right? Because you've got that central authority who is in control of it, and blockchains are notoriously inefficient. Why would you want to use a blockchain if you're a central authority issuing a digital currency? It doesn't make any sense. It makes a lot of sense for Bitcoin, of course, because it needs to be decentralized, and there's nobody in the middle who's controlling it like a CBDC, right? So this graphic, just remember, okay, the properties of CBDCs and the properties of Bitcoin, and because you're going to hear a lot about them in the future. Right? And don't let politicians and people in government confuse you, right? CBDCs will never be great stores of value. They are privacy invasive. They've got all the downsides of traditional fiat currencies, except they're in a digital form, right? So Bitcoin is always going to be the better money. It's always going to be the better investment. It's always going to be the better store of value than any central bank digital currency. All right, that's it from me. All the best, everyone. I'm Clarke Towson, CEO of INTJ Billing.